Uh, okay, let me see. Attendee from QuickTrade. Please indicate to me if you can hear me. We are about to start our technical analysis session. Please let me know if you can hear me by typing a message there. Okay, see that one. Oh, okay. Chat. Hi, Karabo. Hello. Hello, Gert. Okay. Let me see. How can I? Okay. Let me just leave it at this. Okay. Okay, guys. Today I see that we have a few new names here. We have Njabulo Biela. We have Philip Mlapo. We have Pendulo Twala. Tapiwa Dube. I think I've seen Tapiwa before. We have Mac there. Lauren Wills, I'm not too sure. So I've seen John, yeah, Tapiwa Dube one. Tapiwa, I've seen Tapiwa Karabo, yeah, I've seen that one also. Okay, guys, hello. Guys, our market is very volatile. It's been swinging up and down since the first news about the trade war started. That is between the president of the United States, Donald Trump, and the Chinese government or the Chinese governor. There's been a lot of bad talk around that particular issue. I mean, Chinese are threatening to impose more tariffs on the U.S. imported goods, and the U.S. I mean, government is threatening to increase their tariffs also on the Chinese imported goods. So there's a whole lot going on. I think there's a problem with President Donald Trump. He is not really willing to cooperate with the other countries, and he's very, 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 very bad when it comes to trying to win at all costs. When it comes to the U.S. Economy, he wants everything for the U.S. He doesn't care about the other guys. That is very bad. So mainly that is the reason why we're seeing so much choppiness in the market. So that's the reason. Even if you see a trade idea coming out, you can go in it, make sure that you have your risk reward adjusted accordingly, and make sure that your mind is well tuned when it comes to this matter. Because I mean, in the next hour, Donald Trump could come up and say something negative, and the market goes down 2%. Right now, our market is up 1.37%, the top 40, and the US futures are up 1.14%. Maybe later in the day, we're going to be down more than 1%. Just brace yourself for that. Okay, guys. I don't know. Do you have anything that you'd like to put forward to me so that I can have a look at? More especially today, that I see that we have too many new faces, and those that have been attending these sessions, please bear with me because I mean, in this training session that I run every day from 12 to about 1:30, if the guys are interactive, I make sure that I stick to the basics because I mean that's what people need to succeed in trading. Later, when you've understood the basics, then you can try and go a little bit more advanced in your trading. But I mean, at the beginning, there's no need for you to do that. You just need to get the basic information so that you can start making money in trading. Guys, I'm referring to those that have been attending my trainings. If you guys encountered any issues and there's something that you'd like to put forward to me, please do before I go and show the new guys what they need to get really to succeed in their trading. Okay, so Nabiso, you're saying that I must have a look at the stock APN or Aspen. What are you seeing there? In Tsunami. So what would you like to check out there on APN? Is there anything specific, or you just want me to analyze APN? Did you do any analysis? Did anyone do any analysis on APN, guys? I'm asking everyone now, those that have been attending the whole time, not the new guys. I'm referring to guys like, okay, let me check the attendees here. Like maybe Garabo, Tapiwa, John Mombek, Gert. Who else? I'm not too sure about Lauren Wells now. I'm not too sure about that. Oh, is it your first one also? Oh, okay. No, that's perfect. Okay, guys, please tell me, what did you find? Garabo, you did not. Okay, it's fine. John did. Gert did. Guys, thank you very much. I like that. Putting in time and effort is the only thing that will actually make you successful as a trader. Because I mean, if you're not willing to put in time and effort into your trading, you'll never actually see profits. Okay, John, what did you find? And Gert, what did you guys find? I'm still waiting for my internet to update here. It's still busy updating. You actually got a short instead of a long Sonabiso. Okay, it's fine. Let me have a look at that. Let me mark it. I just need to make sure that I remember that. Someone took my pen here. Okay. APN. Sonabiso sees a short, not a long. Okay. Sonobi, so you see a short. Okay. Could you please tell me what you looked at there, Sonobi? So, quickly, what you looked at. Sonobi, so could you please tell me what you looked at there? Okay, but what you are giving me there, Gert, is not your analysis. I need to understand what you found when you did your analysis. I need to get what you found when you were doing your analysis. What did you find? That's what I need. I understand that the price is trading much higher, but I mean, you have your limit price there. You have to put in your limit and stick to your limit. You don't need to chase up here. Put in the limit price and wait for the market to come back to your entry price to put you into the market. If it doesn't do that, then you can just leave it. There are too many other trades that you're still going to get, so you don't need to buy it at market. I understand that maybe the TP also could be too high for you, but I mean, what did you find when you're doing your analysis? Do you see this trade as a buy? Do you see this trade as a sell? Do you think that maybe we should wait a bit? And if you think so, why? That's what I'm looking for here, basically. Okay, but I mean, I understand that you looked at the MACD and the moving average, Sonabiso, but what did you find when you looked at those? What did you find? What did they tell you? What are they telling you? Okay, guys, I expect you to be hands-on. That's the only way you're going to learn. If you just want to come and listen to me talking, and you don't get interactive, and you don't apply what I teach you, you're never going to see any cent out of this market. So you need to be committed if you want to see any profits out of this market. Otherwise, you'll never make it. If you're not willing to put in time and effort, you're never willing to listen to these videos that we do and look at how we analyze charts. Okay, I'll have a look at APN, like you guys asked. Okay, this is the picture of APN on a daily chart. The daily chart is above its moving average. So if it is above the moving average, it means that it's buyable. You can actually buy this one. You can buy it. I don't have the actual entry price on it. I don't have the actual entry price on it. But I mean on the 5th, it crossed above its moving average, and it's been above its moving average since. I mean, it's a buy. It looks like we may go up to 272, 278 levels. I'm looking at 272, 278 levels. That's where I think this price is likely to go to. 272, 278 levels are expected to get there. Around 272 and 278, I think that is a value area. That's where one maybe can look to take a shot if one needs, if one feels like maybe the stock is about to turn, or you get a nice reversal. That's the area where I think one can actually go in and take a shot there. But before we look at these levels, let's check what the weekly time frame is saying to us. The weekly time frame, we are still trading below our moving average. We went below our moving average here. I don't know if you guys can see that. That was the week of the 12th in March. We went below the moving average, and we are actually trying to go beyond the weekly moving average. We are still below the weekly moving average still. So let me check if I cannot find any support here. I'm going to use the line chart to pick my resistance levels. That's my support there. Uh, uh, the resistance level that stands out for me on the weekly chart is 266.68 or 267. We have some resistance there. As long as the market is still trading below that resistance, I think you're going to have a problem breaking up and going up to 280, unless if this market really powers ahead going forward. It's very choppy, like I mentioned to you. The US markets, they look like they are kept at some serious resistance around 2560, 550. Around there, I expect to see like a proper tussle between the buyers and the sellers. Who's going to win that territory is a big question. I have no idea at the moment, but we're just going to keep an eye on how events really pan out around that area. So on this stock, 267 is some serious resistance. So we must be careful when going in on this one. The next level that we have is 272, 272.50. That also is an important area that one should actually keep an eye out for. And if we do take that one out, the next one should be 272, then finally 278. So those are the levels I'm looking at. At the moment, it still looks like it's a buy on shorter time frames. Like if you start from a daily, going maybe down to the hourly time frame, it's still looking like a buy. But I mean, if you look at your bigger time frames, like your weekly and your monthly, those time frames are saying no. You cannot buy. But according to the analysis that I've done here on the stock a couple of well, I mean, a couple of months ago. Yeah, it was months. It was in December. I think it was in December, if not November. December, if not November. I've always said every time when Aspen, I'm sure that you can find it in one of our webinars online. Every time it comes down to 140. So I think 140, there's a lot of buy orders waiting around 140. Around 140, you can expect to see this market bouncing. Every time it goes there, there are buyers pushing the price up. And my target from 40 really is 70 rands. Sorry, 270 rands. Every time it gets to 270 rands, there are sellers pushing the price lower. So I wouldn't risk anything more than 270 rands really on this one. I think it's a 70 rands is 270 rands. Sorry, 270 bucks is very important on Aspen, and the next support below is 240. Those are the two levels I'm looking at really. Those are the two levels I'm looking at. Let's go back to our daily. This is the level I'm talking about here. Around it's around 238, 240. It pushed up here and started moving higher. So 267 is important. We should just keep an eye and see and an eye out for that 267 to see what happens there. So in my opinion, it's not a high probability trade. I would rather maybe wait for the price to get to maybe between 272 and 278 around there. If you take a shot and the market still looks weaker like it does right now, I think you stand a better chance of making money there than trying to go long on this one. That is my opinion, because we don't know what's going to happen next. Okay, do you usually make use of the 50 and 100 moving average? Because I see you got 10 SMA as a standalone. Yeah, Karabo, I do not really use the 50 and the 100 because I mean these are not really. Uh, I mean the moving average basically they do not mean anything, to be quite honest. The 10 simple moving average that I use on my charts doesn't really mean much. It's just there to assist me, excuse me, to sort of like confirm my bias. If I think that the market is moving higher, I apply it and I check it. Okay, I see, okay, it's above the moving average or it's below the moving average. That sort of like confirms my bias that the market is really doing what we think the market is likely to do. So the 200 and the 100 and every other indicator or every other simple moving average that people use, all these things are just useless. The main thing that you should focus on is the price action. Try and spot your support and resistance levels, because I mean time every time when the market gets to its resistance or support, the market usually turns around those areas. So if you understand that part and you apply maybe your moving average, you will be able to make some serious money out of the market without really applying too many indicators, using your MACD, using your RSI, and some using Bollinger Bands and all these other I don't know, countless number of indicators. Those things are not really important. The most important thing is to understand your support and resistance, understand your trend line. Once you've understood those three things, the next thing that you need to add to your charts is your simple moving average. Apply your simple moving average. If the price is trading above your simple moving average and it is far from its resistance, you know that you can go in and buy that stock. And if it has just crossed above its moving average and you had just hit your support or support level, you know that that share or that particular currency pair, if it's a currency pair, or a commodity, if it is a commodity, you know that around there you can actually go in and buy because I mean you've just hit your support. You're above your moving average. It's a good maybe thing to do for you to go in and take a long. That's how it is basically. Okay, I don't know. Maybe you guys hold a different view from mine, which is okay. You guys can actually put that forward. We'll have a look at it. I don't have an issue with that, guys. Really. I see that Karabo is still busy typing something there. Okay, Karabo, please do. Once you're done, I want us to go and try and assist these guys that I knew that are joining us for the first time today in this training. Okay, okay, no, but that's perfect, Karabo. Guys, all I need from you is just to draw a trend line, sorry, a line, get a line chart, use each and every turning point that you see there. I know that you're going to have too many horizontal lines, but I mean, uh, as time goes on, you learn which lines are more important than others, and that will actually help you in understanding how to analyze the market. The market gets to like here, this area here on on APN, that area around 278 is very important. Around there, you can expect the market to reverse. If you get a bearish engulfing bar or you get a reversal pin bar around this area here, 278, then you know almost immediately that it's time for you to go in and sell that particular stock or particular share. Because I mean, you've done your homework. You know where your support and resistance levels are. In this case, we have that support at the top there around 278.12. That's where you are really supposed to go in and sell this market. Okay. Okay, let me. I want to try and show you the shorts first, guys. Those that I knew, please take your pens and papers. I need you to write some of the stuff down so that you understand. What stock would you like me to analyze, guys? Anyone, any stock? I'm talking about the new guys. Which stock would you like me to have a look at? Maybe you can mention two or three. I don't know. It's not an issue. We'll have a look at them. Tapiwa. Let's pick Lewis. Philip. SLM. Someone else? Uh, Tapiwa. You picked two. Okay. SHP, which is ShopRite. Guys, anyone else? Mac. Jabulo. What Matli, Belinda, what did you guys like me to analyze here for you and show you how to get those analysis right? Okay, you want SLM also? Okay, it's fine. Belinda, is there anything specific you'd like me to have a look at? Belinda is okay. Okay. Okay, so SLM also. Okay, it's fine. Let's have a look at SLM first, because I mean it seems like it's getting more votes. Okay. For those of you that are joining us for the first time, it is highly likely that you do not have the monthly chart on your screen. You don't have the monthly, you don't have the weekly. I urge you guys to have those on your trading platforms, the monthly time frame and the weekly time frame. We use that a lot in our analysis when trying to find stocks to buy or sell. How do you get to your monthly chart or your monthly time frame or your weekly time frame? This is what you do. You go to time, you click on time there. Time right now is time 1M, 1 capital M. 1 capital M is for a month. Then you go to the bottom of your window there, or your box. You go to edit. Click on edit. Once you're on edit, you'll find these boxes, the dotted boxes here with a plus sign in them. When you put your cursor on it, it says add new item. You click on that, add new item, click on the plus sign, add new item. Then everything else on your left, you leave it as is, and you have two sides that you need to focus on, or two areas. It's your period and your value. Your period, the period that you're looking for is month. You pick month. If you were looking for the week, you're going to highlight the week and say apply. The value here, you leave it at 1. You do not change the value. You leave it at 1. Month, also, you just go there, highlight month, click on it, and go apply. Then you're going to have 1M. Now, where I had a blank box with a plus sign in it, now I have 1 month. I'm happy with that. I have my month. If you want to put on the week also, you can do the same. If there is any other time frame that you do not have on your trading platform, you can just go there to that blank box with a plus sign, say add new item, and then put in the time frame that you're looking for and the period. The period you should always leave it. You should the value you should always leave it on. Is it the value? Let me check. The value you should always leave it on 1. Always leave it on 1. Are you guys happy with that? Oh, okay. Let me wait for. Yeah. Sorry, man. I cannot pronounce your name. Is it Eled or Eled? I don't know how to pronounce it. Okay. 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 Another thing that I want us to quickly go through is chart types. We have different chart types in the market. If you put your cursor where you have, I mean, those chart types, you put your cursor on it, it says style. It's a style of the chart. In fact, it's supposed to be saying chart style. The one that we have right now, it's called candles. It's candles or candlesticks. This one is called a line chart. The line chart is very important when you're trying to get your support and resistance levels, more especially if you're still new in your trading. In technical analysis, when you're using your line charts, you stand actually a better chance of picking the tops and the bottoms, of picking support and resistance levels. Each and every turning point on a chart is important. You see this turning point there? It's important. This turning point is very important. This turning point here at the top is very important because, I mean, when the market revisits that area again on its way up, you're going to use that point as your benchmark. If it goes through that area, maybe you can go in and take a long, because that would mean that the market has broken out or it has gone through your resistance. But if it fails to go through that area, you can actually use that as an opportunity to go in and short that market and sell it. You'll understand that later as we as we move along. So I always switch between the line chart and the candlesticks. All the other types that we have here, I do not use because they are not important. Maybe once you've gained enough knowledge, you can go and explore with them. But at the moment, there is no need for you to really bother yourselves with those. Just focus more on your line chart and your candlesticks, and you'll be fine. The next thing that I want us to add here. Oh, okay. Tapiwa is busy typing a message. Let me wait for Tapiwa to finish before I carry on. Okay, Tapiwa, the moving average. Yeah, I'm about to go to that one. You right click on your screen and you get this drop down menu here. You get symbols, object, style, and you are looking for indicators. Then go to indicators. Go add indicator. You see that? Add indicator. Add indicator. We are looking for a moving average. So you must check amongst what? Moving averages. We have 10 moving averages here. The moving average that you're looking for is an SMA moving average. Simple moving average. That's the moving average we are looking for. Highlight it. Go OK. Then we come to this window here. Simple moving average properties. Simple moving average properties. The period of the simple moving average, the default period is 1. You can either highlight and type 10, or you can go from 1, and we have 2 arrows here. One is going down, one is going up. So if you go up, you go up to 10. You can go up to whatever number you want to go up to, but we use a 10 simple moving average. And the price for MA is closed. Closed. Leave it like this. Everything else you must leave it as is. The only thing that you are adjusting is the period of the simple moving average. That's the only thing. You must push it up to 10 or edit it to 10 and go OK at the bottom of your window. Now you have your moving average. Let us try and make this moving average a little bit thicker for the ease of learning here. Let's go to, you do not really need to understand that one. This one, it's quite easy. Okay, you now have this thick blue line. This thick blue line tells us where the market is going. When the price, okay, each candle that you see here represents the price. It means that it is the price. Let me show you how to read these candles. Forget about the colors. I will explain to you exactly what these colors mean. These are my own settings. What I did here is that the the candle, the red candle, it means the market is negative. If you check at the top of your screen, there are numbers that you can see. It says bars 17. It's got date. It's got time. It's got open. It's got high, close, change, percentage change, and all of that. If the percentage change at the top is negative, like on this cursor, I have a negative 5.65. It means that the market is down. It means that the market is negative. That's what it means. And if you put your cursor maybe on another bar and you see a normal number, like on this one, I'm seeing 2.78%. It means that the market was positive because it's a positive sign because it doesn't have that negative before the number. It means that this is positive. Okay, it means that it's negative. So when when the price is moving above the moving average, when the price is above your moving average, it means that that market is positive. that market is strengthening, that market is going up. The moment you see your candles breaking below your moving average, what does that mean? It means that your market is starting to weaken. Your market is now going down. It goes above again, it means your market is starting to move up, and you will have to look for buy opportunities only. Do not try and sell a market that is strong, a market that is rising. Instead, try and look for sell opportunities in that market. Do you guys understand what I'm trying to explain here? Okay. So, okay, let's have a look at Sanlam. Sanlam has been trading above its moving average, or the thick red line, since 2017, and it's just kept above. There is a positive sign. It means that it's on a buy, so you can only look for buy opportunities. Do not try and sell Sanlam. Instead, try and look for buy opportunities, because I mean, if you try and sell Sanlam, you're going to lose money. You're going to lose money. But let's check. In the past, I mean, in March, we had a negative month. The market went down 4.69%, and month to date, we are down 4.28%. We had two corporate events taking place. There was a dividend distribution, which caused the price to come down. You learn this as you as we cover more of our learning material, that if the company is paying out a dividend, the price of that particular stock or that particular share has to adjust accordingly. If the company took 5 Rand per share, it means that the market price has to decline at least by 5 Rand per share to indicate that there has been some money taken out of the value of that business. So the price usually declines by the same amount of share that there is going to be, or that is being paid out, or that the company is distributing back to its investors. And there was another placement transaction that happened earlier. I know that that one is going to be very difficult to understand. I'm not even going to try to go back and try and explain what it means. But I mean, those are the two main things that caused the price of Sanlam to decline. The third one is the market sentiment. The market sentiment has been negative over the past couple of months. So that is the main reason. One of those things that caused that is the trade war between China and the US. It's not a full-blown trade war yet, but I mean, it is a really big thing at the moment. It is a really big thing at the moment. Yeah, one should actually keep an eye out for that. Okay. Well, I mean, as long as the price is still above the monthly chart, it means that it's a buy. So on Sanlam, I would say that Sanlam is on a correction. It's been going down for almost 2 months. I think Sanlam is still on a buy on a buy side. This is just a pullback that we're seeing here. Very soon, I think we're going to be going back up again, but we'll see. If you get any monthly close below this thick red line here, that could be the sign that the market is starting to decline. So you guys must always be careful when you are buying a stock. Check how the monthly looks. If it's trading below its moving average, it could mean that that market is really beginning to decline. If it is above, it means that it's still on a momentum pushing higher. So it's a good stock to have as a long. Okay, your monthly is showing you that it's a buy. What you need to do next is to go and check your daily chart. Your daily chart has to agree with the monthly. If the monthly is saying that it's a buy, your daily chart has to say buy also. If your daily chart doesn't say buy, It is going against your monthly, you do nothing. You wait for the daily to first agree with your monthly chart before you can do anything. Don't know if you guys understand what I've just said now. Your monthly chart here is saying buy, the price is trading above the moving average. So the price on your the price on your daily chart should also show positive signs. It should be above your moving average. Do you guys understand what I'm saying there? Do you understand? Can anyone explain what I've just said now? Jabulo, Philip, Mahli, Elet, Belinda. Can you guys explain what I've just said here now? You can all go at once, guys. It's not an issue. I just need to see if you understand what I'm trying to show you here. Yeah, Ilet, thank you very much. You put that out nicely. You put it like a software developer. Are you a developer by any chance? But I mean, I like the way that you did it. Philip Mulapo is saying that monthly and daily charts have to agree. Otherwise, wait. Oh, okay, I see. If then yeah, I see that. Okay. Uh, so those are the things that you need to wait for. Because I mean, to be successful in trading, you need to make sure that you have a strict set of rules that you follow. You need to follow those rules all the time and do not deviate from those rules if you really want to make money. Trading or making money in the market doesn't need to be exciting. You just need to make sure that you follow the right rules, and those rules will take you to a place where we'll start really making some real money in the market. You just have to make sure that you stick with those rules, you go and backtest them, check if that can make you money. Like right now, let's look at Sanlam. The monthly is above your moving average in terms of the price, but look at your daily. Your daily is saying sell. You do not really need to go in and sell this market if you don't want to sell. You just have to wait for this market to first cross maybe above your moving average here. Once it does that, you go in and buy that market. You wait and you go in and you buy this market. Like here. Look at look what happened here on the 15th of Jan. The price was going down for a couple of days and it went above the moving average. You at the close of this candle here, at the end of business, maybe the following morning when the market opens, you go in and you buy, and the market went up. It went below, you do nothing, you wait. If it goes above like this, you buy. Well, it came down a bit and it carried on moving higher. It was around the time when it was about to come off. So I understand why this share is down like this. I understand. I understand why this share is down like this. That's the main reason why it came down. Basically, it was at the highest point. It was about to come off. So that's what you look at. Let's look at. I know that you did not ask me to look at this. Let's look at Steinhoff SNH. I want you guys to tell me if SNH was a buy. I know that a lot of people late last year lost a lot of money on Steinhoff, but I want you guys to tell me whether Steinhoff was ever a buy in 2017. Guys, please tell me, was Steinhoff ever a buy in 2017? Please have a look at this chart carefully and tell me if you think that Steinhoff was ever a buy in 2017. I'll show you a couple of stocks that look almost like Steinhoff here. Guys, more especially the new guys, please come join me here. I want to see what's going on this one. If you tell me that you don't think so, please you must give me the reason. We are using the moving average as our main indicator here, or as our guidance here. You must refer to the moving average all the time, so that I see that you understand what you're talking about. You must always refer to the moving average. Okay, the price is below the moving average. It went below the moving average when in August 2016. August 2016, it went below the moving average, and it has been trading below the moving average the whole time. So there's no need for you to go in and buy this market. Let's check the daily. How many times it had the moving average trading above the price? Will I get that? Let me try and see. This chart doesn't look good. No, this chart doesn't look good. Okay, but I mean, it was a sell. Now let's look at another stock. The stock you're going to look at is Braid. The short code is BAT. Is Braid. You see, Braid, this is 2014. Yeah, 2014. Braid was trading above the moving average, and Braid was just rising. People that were holders of Braid or were buying Braid, they were making a lot of money. They were very smart at a time when it was moving up like this. And in 2016, it broke below its moving average. That was in June 2016. That's when the party ended. That's when the party ended. That's when the music stopped. And some of the guys that did not understand how to analyze the market, they kept on dancing. But the music was gone already. Since then, Braid has been going down. Can you all see that? Since then, Braid has been going down. So all you needed to do to make money in this market, you were just supposed to sell Braid and sit on your hands and do nothing. Let's check how the daily looks. Okay, I just want to show you something here. We've had so many times in 2017 of the price trading or moving above the moving average on the daily. But all you needed to do was to wait for the price to first cross below the moving average and then sell that market. Here, there was a bit of a trend line that was being formed here. It traded below the trend line and the price just kept on declining. That's all you had to wait for. Even this year in 2018, the price went above the moving average at one point, and around this time here, end of March, it went down below the moving average and started declining from 43 down to about what, 33. That was easy money. You're just supposed to go in and do that. Wait for the market to go up. The moment you see it dipping below the moving average at the end of the trading session, just go in, sell that market, sit on your hands, wait for it to move lower, and you've made your money. Do you guys understand what I'm trying to say here? Okay, let's look at another stock. Another stock that maybe we can look at is CFR. Another stock that I want us to look at is CFR. CFR since 2016 August, it's been trading above its moving average and it just went up the whole time. People that were holding some CFRs or Richmond, they made a lot of money in this market. That was until August 2017. No, sorry, December 2017. End of December 2017, we closed below the moving average. And since then, we haven't closed above the moving average. January, the market was up 2.6%, but the problem is that the market still closed below the moving average there. In Feb, the market closed down 8%. March, we're up 1.9%. And in April, month to date, we are up 6.3%. That's all because of the rand weakness. The rand started weakening against the US dollar because people were running away from riskier assets, moving into safe havens like your US dollar, your yen, your gold price. So people were starting to invest in those developed markets. They were running away from emerging markets. But that area there is very important. That area where this market is trading is very important. That area is let's call it 112. 112 is very important on CFR. If we get any monthly close above 112, we could see this price actually moving higher. We could see this price getting maybe to 120. 120 and then higher to 130. We could see that happen over the next couple of months. But what I wanted to highlight is that the moment you see the stock closing below its monthly moving average, it means that that stock is starting to weaken. It's likely to go down over the next maybe a couple of months thereafter. So we saw that with CFR here. Immediately after that, it started moving lower. I have a few other shares that are showing signs of weakness right now. Let's have a look at Lewis. You guys asked me to have a look at Lewis. We've looked at Sanlam. This is Lewis. Lewis, in July 2015, it went below its moving average and it started moving, going down. It never traded above its moving average. It was always down below the moving average. Do you guys see that? Do you guys see this? This is the candle I'm talking about. This long big candle there, that big engulfing one. Though I think around that time they had a problem with the National Credit Regulator. That I think they charged people more monies than they were supposed to charge them. There was a whole lot of chaos going on there. So the stock in 1 month it dropped 41%, 41.3%. The month was July 2015, and the stock just kept on dropping below its moving average, and it was never above the moving average until end of January 2018. January 2018, it closed above the moving average. That's when we started to see more and more buyers coming in and buying Lewis. In Feb, the stock rose 19%. March, it rose 1.74%. And month to date, it's up 4.5% or 4.49 to be exact. So as long as the stock is trading below its moving average, you are not really supposed to buy that stock unless if you understand your support levels. Even if you do understand your support levels, the best thing to do is to first wait for the stock to reverse from its levels, close above its moving average, then you can go in and buy that share or buy that stock. If that hasn't happened, do not try. You're going to get yourself bent. Do not try to do that. So that was your Lewis. Right now, Lewis looks like a hot buy. It's been doing very well. Well, I mean, I'd be happy maybe to look for a long trade on Lewis. Sorry, Lewis. I'm not saying that you must go in and buy Lewis now. You must wait for the daily to show that Lewis is now a buy. Okay, now let's go and have a look at. Okay, let's look at these levels. These levels are actually very important. We must check these levels. Well, I mean, we have some serious resistance between 40, call it what, 46, 46 and 40, 43.50, 46 and 43.50. We have some resistance there. That is why we see our price not taking that out area with ease. There is a lot of there's a lot of fighting happening around that area between the buyers and the sellers. The buyers are trying to go through that point, and the sellers are pushing the sellers down. The buyers are pushing the sellers are pushing the sellers. No man, what did I do? The buyers are pushing, the sellers are pushing the buyers down, and the sellers are trying to push through this area. And we've tried almost 2 months. And we haven't actually succeeded in doing that. So there is a whole lot happening there. So I think we should keep an eye out for that. That area is 46, 43.50. But I mean, in my view, Lewis is a buy. What you need to wait for, you need to wait for the price to, every time the price crosses above your moving average. But I mean, around here, I don't think that you have to do that. Let me see if I can spot any overhead resistance there. That overhead resistance around 44, 41 on the daily time frame. You see, right now we are trading in a range. Really, we are range bound. We are trading between 44. We are trading between 44 and 38. 44 and 38 on Lewis. So there is a good chance that we could see the price maybe coming down to 38. When it gets to 38, 38.50, I think those are the levels that one can actually go in and start buying some Lewis shares. At the moment, I wouldn't buy Lewis. Lewis around 44, I think it has some huge overhead resistance. There is some sell-off that I'm anticipating around those levels. I think that we may see this price coming down to 38.44 or 38.50 or 38 bucks. So that's the level where maybe you can go in and buy Lewis. It's not looking good at the moment. To buy, you want to see the daily trading above its moving average, moving higher, then you can go in and take a long there. Are you guys happy with Lewis? What we've covered there? You do not want to go against the main time frame, which is your monthly Lewis. I know that if you go in there, take a shot, come down to 38, you feel like a genius. I know, but I mean the best thing to do is to stay conservative, stay disciplined, and never do anything. Wait for the price to come down to 38. Around 38, if you see a nice bounce there, You can even maybe try a blind entry at 38 as long as the market is looking strong. Go in and take a long there. You should be able to make your money without a problem. Sometimes you need to wait before the market gets to the levels. Once the market gets to the level that you're looking for, you just go and grab your money. Just go and grab your money. That's it. You don't need to fight for it. Okay, let's look at SHP. That's the last one you're going to have a look at today. Let's look at SHP. We do the same. We start from the monthly time frame. We started moving higher. I think or going higher in March 2016, and the price of Lewis has always been trading above the moving average. So those people that bought Lewis around 2016, they made a lot of money between 2017 and the current year, 2018. Although we've had a negative month in March, we're down like 1.3. That's nothing. And again, month to date, we are down over 3%. We are down over 3%, but overall, the price is still above your moving average, which means that this is a rising market. This is a bullish market. Now, let's go and have a look at our daily. Let's see what our daily is saying. Our daily is saying short. Our daily is saying short. We got our first signal on the 13th of March. So what do we do here, guys? Please tell me. What do we do here? We got our first sell signal on the 13th on the daily. The monthly is still saying buy, but the daily is now saying sell. That's when we got our first sell signal. What do we do here? Please, come on, guys. Please help me here. What do we do here? Philip is saying we wait. Alice is saying we wait. Okay, guys. The two guys are right. The two guys are right. We wait. Waiting is difficult. Waiting is hard. But the results that you get at the end of that long wait are amazing. So we are waiting. We are not buying. We are not selling ShopRite. We are waiting for the day that the price of ShopRite is going to cross above its moving average like it did here in December 2018, like it did here, and start buying this market like it did here. We're waiting for it to cross above and we'll go in and buy. We're not going to rush in and sell. You can rush in and sell if you want to take short trades, but I'm just talking about understanding the overall picture of the market. If you want to understand where this market is going and you want to make sure that you go with that flow, you do not go against the trend. That's what is that's what is that's what is important in the market. If you don't want to upset yourself, you don't want to lose your hard-earned money, make sure that you are running with the main trend. Otherwise, you are going to lose a lot of money trying to take short-term opportunities. Short-term opportunities, once you're experienced, yes, it's fine, you can do them. But before you gain that experience, before you gain that understanding, it's important to stay conservative. It's important to stay, I mean, to keep that cool, to remain patient. That way you'll be able to make money in the market. Guys, like I said, trading does not need to be exciting. You just need the skills to go in the market and capture some profits. That's all you need to do. And that's the only way that you can make money from the market, by being patient and being conservative. And you'll always make money. Okay, guys, thank you very much. That's the end of our session. If you guys have more questions, please shoot. Otherwise, we are done for the day. Please join me again tomorrow. Please make sure that you go and apply whatever that we've learned here. Please make sure that you back test it on your charts. That's the only way you are going to be able to learn how to make money from this market. If you practice, if you don't practice, you are going to be left behind. You are not going to be able to make money. This is a practical subject. In trading, you have to make sure that you get your hands dirty, you get involved, you invest some time and effort in order for you to get something. In trading, you eat what you kill. No one can trade on your behalf. Even if you get some some guru, uh, some international guru, and they give you a trade idea, you must first analyze the trade idea. Make sure that you satisfy yourself that it's a good trade idea. It agrees with your trading strategy before you jump in and take a trade. Otherwise, you're going to end up blaming that guru for losing you money. And that's not the way to trade. In trading, you do not trust anyone. In trading, you do not think, you trade what you see. Don't try and think, just trade what you see. Guys, thank you very much. Have a great afternoon. Oh, thank you so much. Thank you so much, John. Thank you so much. Okay, guys, you're welcome. Ciao, bro Philip. You're welcome. Sonabiso. You're welcome, big guy.